If you have $1,000 right now and you don't know where exactly it should go, this video will change that. I built a $100,000 investment portfolio by 21, working a retail sales job by following this simple investing strategy. In my situation, nobody taught me to invest. I didn't have it in school, my parents didn't help me out, and I had to figure it out all on my own. I'm going to show you the exact steps I took in the next 10 minutes. When I started investing, I had almost zero emergency fund. I was investing money I had no business investing. I had almost nothing saved as a backup. That's mistake number one no one talks about. By not having an emergency fund, there's the pressure of watching your money move. This can easily lead to some emotional decisions which can hinder your portfolio's performance. Before you start investing a single dollar, you have to have 1 to 3 months of expenses saved on the side. That money sits untouched, and this part is not optional. If you're investing without an emergency fund, you're one mistake away from wiping out your portfolio. That's essentially how people lock in losses. When it comes to building an emergency fund, keep that 1 to 3 months worth of expenses set aside into a high yield savings account. The reason why you should keep it in a high yield savings account is because you're at least making 3 to 4% on your money versus your checking account, you're basically earning zero. While you're not doing anything different, you're making an extra $40 to $50 a year. Now that you have your emergency fund in place, we can discuss how to allocate your first $1,000 into investing today. So here's what I'd actually do with $1,000 if I had to invest today. At this stage, you have two options. You can invest it into VOO or you can invest it into SPY. Both of these track the S&P 500, meaning they give you the same exposure to the top 500 companies. SPY has a slightly higher expense ratio than VOO, but at this stage with $1,000, that doesn't mean much. A lot of people think that instead of ETFs, they should go into individual stocks when they start investing, with the reasoning being slightly increased growth or higher growth potential. But that's furthest from the truth. Individual stocks feel exciting, but for a beginner with $1,000, you're essentially just gambling. When you bought Apple or any other individual stock, you were making a bet that Apple was going to outperform the other 499 companies in the S&P. Over a 10-year period, roughly 90% of actively managed funds fail to outperform the S&P 500. If professionals with billion-dollar research plans and teams of analysts can struggle to outperform the S&P 500 consistently, then a 21-year-old on Robinhood picking individual stocks isn't going to either. Individual stocks aren't wrong, but they're wrong for right now and when your portfolio is still small and you're still learning. So here's what you're going to do. You're going to open Robinhood, Fidelity, or your brokerage app. You're going to search VOO or SPY. Buy whatever dollar amount you can, and you don't need to purchase full shares. You can buy fractional shares, meaning you can invest with as little as $1 on Robinhood. With that amount, start investing regularly. It's going to ask you if you want to make this a recurring investment, and my advice would be to check that box. Have a consistent investing strategy, whether it's $25 a week, $50 a week, whatever you can fit into your budget. To put this into perspective, a weekly purchase of $25 into stocks is going to turn out to be $1,300 by the end of the year. You don't need $1,000 today. You just need $25 a week. And over the course of the year, you've invested over $1,000. The next step to do is turn off notifications and let it invest on its own. The single best thing I did for my portfolio was stop checking it. Every single day, the market changes. One day it'll go up, the other day it'll go down, but it always comes back. Your only job when you're just starting to invest is to buy. Don't panic sell. The concept of regularly investing that I was mentioning is called dollar cost averaging. Dollar cost averaging allows you to avoid trying to time the market. Buying $100 every single month, regardless of if the market is up or down, is significantly more powerful than trying to buy at the perfect moment. When the market drops, your $100 buys you more shares. Meaning, when you hear that the market is crashing, that's actually good news for someone like you trying to buy it up. The idea that I want you to have in your head is you're not trying to get rich by next month. You're trying to build wealth and be wealthy by the time you're 35. Investing now matters more than anything else. Beyond the specific investing strategy, starting investing now matters more than the amount you're investing. $1,000 invested at 21 with a 10% return turns into roughly $24,000 by the time you're 55. If you wait until 30 to invest at $1,000, by the time you're 55, that money is worth roughly $8,000. You lose nearly $15,000 waiting 9 years. You don't need a high salary. You don't need a finance degree. You just need to start. When I started my investing journey, I was making $9 an hour. I started working my way up slowly to $15 an hour and then some more over time. My income was not an advantage at the beginning, but my habits that I built were. Starting early and being consistent is what allowed me to achieve this level of success while being so young and on a seemingly lower income. So here are the 3 things I want you to do this week. Number 1, open up your brokerage account if you don't have one already. You can choose Robinhood, Webull, Fidelity, or anything else that you find best. For me, I prefer Robinhood for its simplicity. Next is I just want you to start investing, meaning put whatever you can afford, whether that's $50, $20, doesn't matter, into SPY or VOO. Next, set up the recurring investment feature, so that way you don't have to think about manually investing every single week or month. And then the last step is coming back to this channel every week so you don't miss another video like this. In the comments below, drop what's your biggest hurdle that's stopping you from investing your first $1,000, or what was the biggest mistake you made when you started investing. Thanks for joining me today. Don't forget to leave a like and subscribe for the algorithm. Hey, my name is Casey, and this was another investigative look into your wallet's future. I'll see you in the next one.